You see the headlines all the time, right? National debt is soaring. It feels like pretty much every country on the planet is borrowing money. But that leads to this really fascinating, almost paradoxical question.
Seriously, think about it. If every nation is a borrower, who on earth is the lender? It sounds like a brain teaser, but the answer actually reveals the hidden engine of the entire global financial system. And you know what? It's a puzzle we're gonna solve together, right now.
And just so you know, there are no shadowy villains or secret groups pulling the strings here. Nope. Instead, we're gonna pull back the curtain on the quiet, surprisingly stable machinery of trust that allows this whole global system of borrowing and lending to actually work.
Okay, so to solve this puzzle, our first move is to figure out who the players are. Who is actually buying all this government debt? The answer isn't one person, but actually just a handful of key groups.
So here it is, our first major clue. The creditor isn't one single thing, it's more like a mosaic of different groups, and each one has its own reasons for lending. Let's break down exactly who they are. First up, and this one might actually surprise you, it's people like us. Yeah, really. When you put money into a pension plan or a retirement fund, that cash doesn't just sit in a vault somewhere. Fund managers invest it, and you know what one of the absolute safest places to put it is? Government bonds. So in a very real way, your retirement savings are helping to fund the government. Next up, we've got banks. Now, banks need to hold a certain amount of super safe, super stable assets, just to make sure they can always cover their day-to-day operations. And government bonds, they're the gold standard for this. They're used as collateral for all sorts of financial transactions, which makes them a totally crucial part of the banking system's plumbing. And then, of course, there are foreign savers and governments. Think about countries that sell way more stuff than they buy from other countries. They end up with a big surplus of foreign cash. Well, they need a safe, stable place to park that wealth, and buying another country's government bonds is often the perfect solution. All right, so now we know who the lenders are. But that brings up the next big question. How does a simple promise from a government to pay someone back become this massive, multi-trillion-dollar global market? Well, the answer is all about the machinery of trust. You know, it's a remarkably simple process when you break it down. First, a government issues a promise. We call that a bond. Second, big financial institutions buy these bonds directly from the government and then they sell them to others. And third, that bond can then be bought and sold by basically anyone on the open market, just like a stock. It's this simple, standardized process that makes the government's promise a tradable thing. But here's the thing. None of this works without the secret ingredient, which is trust. A bond is only worth something if the people buying it believe the government will actually pay them back. And that belief is backed by two big things: the government's power to collect taxes and the potential for the whole economy to grow. In this market, trust really is the true currency. And that trust, it has real, tangible economic power. When lenders have a lot of confidence in a government, they don't need a high interest rate to lend to them. This means lower borrowing costs and a ton more flexibility for the government. But when trust is low, lenders demand much higher interest to cover that risk, and that can seriously tie a country's hands. So that brings us to a really critical question. We've been talking about how the system works when everything's going smoothly, but what happens when that essential ingredient, that trust, starts to fade? In normal times, when confidence is high, the system is pretty calm. A government can borrow money at a stable low interest rate, everything's predictable, manageable. It's kind of like the financial version of a calm sea.
But what happens when a storm hits? What happens when markets get nervous, maybe because of political turmoil or a weak economy, and a government's credibility just starts to crumble?
Well, the effect is immediate and it's dramatic. Just look at that jump. Lenders suddenly demand a much, much higher interest rate to compensate for all that new risk. Borrowing suddenly becomes incredibly expensive, sometimes almost impossible. And this is how a debt crisis can just spiral out of control, all because of a breakdown in trust. So now we can finally go back to our original question and put the last piece of the puzzle in place. We can solve the mystery of the global creditor.
The most important insight is this. The answer isn't a who. It's not one person or one bank or some shadowy figure in a boardroom. The answer is a how. It's all about the system itself. So the key takeaway, the thing to really remember, is this. The creditor is a network, not a name. It's that huge decentralized system of pension funds and banks and savers that we looked at earlier, all connected through a market that's built on a foundation of trust.
Okay, so this is all a pretty fascinating concept, right? But why does this network actually matter to you in your day-to-day life? Let's connect the dots. So here are the big lessons. First, remember that government debt is just the other side of the coin to our savings. Your retirement fund helps build bridges and roads. Second, credibility is everything because markets reward trust with lower costs for everybody. And finally, you have to understand that this entire network connects your personal financial future directly to the stability of the entire nation. It really is all one big system.
So we can now reframe our original puzzle completely. The right question isn't who is the shadowy lender. The much more interesting and insightful question is, how does the quiet, cautious saving of millions of different people get transformed into one vast, reliable market that can fund entire countries? And that is a puzzle worth understanding.